Good afternoon, guys. It's Workin bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the one-day chart on Coinbase. And last time we spoke, guys, I told you that Bitcoin was looking overextended. We were looking at the weekly, and we were on. In fact, I'll just break it up very quickly here. We were on week 8 of green candle. This is before we had the breakdown here, guys. And typically, I told you between week 8 or 9, that is when you see a pullback. And of course, we had price jump up here, create one more higher high for the year, created a yearly high, a high for 2019, got up to about approximately 5,500, just shy of that. And then, of course, we had that breakdown. Now, coming back here to the daily chart, guys, I told you last time we were seeing what looked like the possible ascending triangle. That's typically a bullish sign, but I told you last time this was extremely just sloppy looking, and we had a bunch of dead space here, and this was just a very, very sloppy looking ascending triangle, if it was that at all. And of course, now we've seen the way that it's played out here, guys. It's kind of invalidated this altogether. We had a small little break up here to approximately 5,500. As I said, the first sign that this was not going to continue should have been on the breakout, that it was not backed by much volume, a tiny little spike in volume. If this was in fact a major breakout here, then we would have had much more volume breaking out here, guys, and we just didn't have that at all. We had a volume dropping, and then we had a breakout of this line here, and the breakout, again, tiny little uptick, but not much uptick at all in volume here. And then, of course, it completely reversed course and ended up breaking down, which invalidated this possible bullish pattern here of an ascending triangle here. And now we're breaking down. I think $5,000 is the next area to watch very closely. We did slightly break through it here just briefly. Now a wick here, that doesn't count at all in my opinion, but I do think $5,000 is going to be a very a good psychological number to see whether or not the volume that we've seen increase here over the last week and a half is going to be a real sustainable volume, or if this is just a lot of people FOMOing in, with no real sustainability. In other words, no real confidence in the market. Just a lot of guppies getting in, FOMOing in. We'll have to wait and see how this plays out. But I do think if $5,000 breaks, which is a real possibility here, if that does break, it's going to be a real test. We could see a lot of people just as fast as they got in, jumping out of the market. Just as quick as they got in due to FOMO, they'll get out due to FUD. So we'll have to wait and see kind of how that ends up playing out at 5,000. If 5,000 breaks and we don't get a major drop, I think that'll be an extremely bullish sign. The two areas that I'm watching, if we go sub 5,000 decisively, again by decisively meaning a daily candle opening and closing below that, I'm going to be watching 4,900. So this area right here. Why 4,900? Because we can see these 3 daily candles here were closing at or above that area for, again, 3 days in a row. So I do think that may act as a decent support. We may get a little bounce off that area. The next area that I'm going to be watching, kind of the last stand, is going to be the low of this prior order, of this order structure here that we're watching now, and that's going to be at approximately 4,800. So right around there, the bottom of this wick right here, 4,800, guys. I think if that breaks down, I think we're going to be dropping to about 4,500. Really, I've got it marked at 4,540 here. Why? Because if we come back here and we saw this major breakdown from 6,000, that was the first area that we that the bulls showed up, tried to push price back above. They were unsuccessful. That 4,500 acted, or really 4,540, acted as a strong resistance, and then of course we continued right back down. So what was resistance very often acts as support. So this is going to be the first area that I see that I will start to get back into Bitcoin. Other than my long-term hold portfolio, I'm completely out of Bitcoin, and this is the first area that I'll start to ladder in. I've got buy orders laddered in starting here, very light, a little heavier here between 4,400 and 4,250. As we can see right here, this acted as a strong resistance. What was resistance, it may act as support. We'll have to wait and see how it does, if it does. But between, again, 4,400 and 4,250, I've got more buy orders laddered in there, and then below that, the major area that does have to hold, the very strong area of resistance that took us so long to break above, needs to start acting as support, and that's going to be that 4,120 all the way down to 4,000, and this is where I've got the majority of my buy orders set, down here, looking for a strong bounce off that area. If 4,000 does break down decisively, again by decisively I mean a daily candle opening and closing below, if that does happen, 4,000 breaks down, I think 3,900 is going to be ignored, 3,800 is going to be ignored, and I think we're going to drop all the way down to at least 3,600, if not 3,550 35.50. And if that does happen, guys, you're going to see a lot of fear and panic, and I do think that could result in possibly dropping down for a double bottom here at our prior low, which is at approximately 31.30 to 31.50. Again, that'll depend on your exchange. So I do think if 44,000 breaks down, we run that risk of retesting the prior low. Could that prior low break? Yeah, it absolutely could. Is it probable? I don't think so. I think more likely we'd come back down for a double bottom, but you never know. You never know. But again, $4,000, I would expect 4,000 to 4120 to hold. I do think there's a good chance that holds. Better than 50-50. Not much better, but I do think better than 50-50 that area holds, and that's why I've got a lot of buy orders down here, guys. But again, I have a very tight stop loss, knowing that if 4,000 breaks down, guys, it could be a very quick drop to at least 35.50 to 3,600. When am I going to start to get extremely bullish? It's going to be when we can clear this prior order structure right here. This prior order structure, since we broke down from 6,000, this was really the only area that acted as a strong support. Really the last stand for the bulls until all hell broke loose and we just completely tanked here. So this, what was a support here, is now, of course, acting as a strong resistance. We can see it just over the last, really the last week or so. We can see it's acted as a very strong resistance here. So until we get above that resistance, and I showed you guys last time that was that golden pocket between the 618 and the 65 fib level, coincides perfectly with this. So until we can get above this area, not by a wick, but a decisive break above this area, and then we come back down and retest, and what was resistance acts as support, I'm very skeptical of this move. As I said, this could just be a complete bull trap. I'm very, very skeptical. We'll have to wait and see how it plays out. But if we break above that and then we come back down for a retest, and again, the top of this area is at about 5,600 as I've got marked off here. If 5,600 starts acting as support, I will start to get extremely, extremely bullish, guys, and I'll start to believe that the uptrend has continued. But until that happens, guys, I do think there's a good chance we're just going to continue to head right back down, and I'd look for that bounce between that 4,500 and 4,000, a nice strong bounce off that area. All right, looking at our moving averages, this is on the weekly chart. We can see that price came up, found resistance right at the 55-day EMA, tried to break up, didn't quite reach the 50-day moving average here, just shy of that. This 50-day moving average will likely act as a decent resistance, as we can see right here as it has. Again, when will I start to get bullish? A break above this 50-day, not 50-day moving average, 50-week moving average. We're on the weekly chart, the 50-week moving average. As soon as we break above the 50-week moving average, guys, and again, that starts acting as support, not just a wick above, but that's if the 50-week moving average starts acting as support, I'll start to get extremely, extremely bullish. But until that happens, guys, I want to make sure that the 21-week moving average, this area needs to hold. If that breaks down, guys, I'll start to get extremely, extremely bearish. And of course, we have our 200-day moving average down here that should act as a very strong support if and when it does ever get there. Let's go to the daily. Looking at the daily, guys, we can see we're below the 8-day EMA, no big deal. The 21-day EMA needs to hold, in my opinion, a decisive break below that. By decisive, I mean a daily candle opening and closing below the 21-day EMA would be a very bearish sign, guys. We'll have to wait and see how this plays out. But right below that, we do have the 200-day moving average, and that should act as a very strong support. If that does break down, guys, of course, as I said, I'll start to get very, very bearish. But we do have that down here, and I would expect it to act as a decent support here, at least temporarily. Checking longs and shorts here, looking at shorts initially here. Shorts, they were slowly rising. They're just basically stagnant here. I think this is a good sign that shorts are not stacking as price is breaking down. If they were, that would be a sign there's a lot of guppies in the market just chasing price. So I do think this is a fairly good sign that shorts are not stacking here. We'll have to wait and see how this plays out. Now, I know that's confusing. Often I tell you if shorts are stacking, longs are dropping, that's a good recipe for price breaking up to liquidate those shorts. And that is still very, very true. But what often happens, if price is just being driven up purely as a short squeeze, in other words, purely to liquidate shorts, often as fast as it comes up, it comes right back down. So I do think that it's a good sign that right now that we're not seeing shorts chasing the price. As price is dropping, shorts are not rising. I think that's a rather good sign in my opinion. Overall, for the overall health of the market, even though temporarily it could bring us a little more downside. Looking at longs, Long slowly dropping here. Now that of course is even though you could make a case that they're just chasing price as longs are dropping as shorts are as price is dropping. Yes, you could say that, but they're not dropping to the degree to where it's really a chase price scenario. I do think more than likely all it is people that entered into their positions down here increased their stop losses, and of course now it's just hitting some of their stop losses here, and so they're just taking profits. That's a healthy sign. Now I'll have to wait and see kind of how this all plays out. But overall, I don't think we can read too much into the long versus short chart as of right now. So I'm going to go ahead and wrap things there, guys. Basically, we're just, my opinion, no, not financial advice, but in my opinion, this is a good time to just sit back, watch, and wait. As I said last time, wait and see kind of how this plays out. First area I see to start getting interested in Bitcoin is going to be at about 4,500. Doesn't mean it has to get down here, guys. Just, again, that's just my personal opinion between 4,500 and 4,000. To the upside, a break above 5,600, I'm going to get very, very interested in Bitcoin. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Workin, signing out.